Thanks for staying with us, everyone. We begin with news from the Bank of Ghana, where the Monetary Policy Committee has increased the rate at which it lends to commercial banks to 29.5%. That is 1.5% up from the previous time they announced the policy rate. Now, this, they say, is to check threats to inflation. Here's Governor of the Central Bank, Dr. Ernest Addison.
The staff-level agreement with the IMF, the Bank of Ghana and the Ministry of Finance have finalized a memorandum of understanding on zero financing to the budget, which will be signed shortly. The passage of the relevant revenue bills by Parliament will therefore conclude the required prior actions to advance Ghana's program to the IMF Executive Board. This will be critical in resetting the economy on the path of recovery, including putting it firmly on a disinflation path and sustained growth. Headline inflation has declined marginally for 2 consecutive months, but continues to remain relatively high compared to the medium-term target of 8 plus or minus 2%. To place the economy firmly on the path of stability and reinforce the pace of disinflation, it is important that the monetary policy stance be tuned further to re-anchor inflation expectations towards the medium-term target. Given these considerations, the MPC decided to increase the monetary policy rate by 150 basis points to 29.5%. Additional measures. The committee also decided to reset the cash reserve ratio on domestic currency deposits for banks from 12% to 14% effective 13th April 2023. In addition, the bank will step up liquidity management operations to address excess liquidity conditions in the market. The committee will continue to monitor developments in the banking sector and deploy other macro-prudential tools.
Governor of the Central Bank, Dr. Ernest Addison, addressing the press a while ago. We want to link up with George Afe, who is live for us at the Bank of Ghana. So, aside from moves to check inflation, what other reasons did he give for the policy rate hike?
So, Darrell, with respect to what was the other reasons that accounted for the inflation or the policy rate hike, the governor was also worried about the fact that the domestic debt exchange program was also worried about how that could also bring some liquidity into the system in terms of those bond payments and how they could use the policy rate actually to check this. And that is why it gone up marginally. He sees inflation as a major challenge, and therefore it might be too early for those who have been pushing for a rate maintenance or a marginal drop to go ahead with that. The governor again explained during the question and answers that they're looking at ending the year at inflation rates around 29%, and he believes that the monetary measures being taken together with the zero financing that the Bank of Ghana is working with the Ministry of Finance might go a long way to also contribute to contain inflation. So, Darrell, with respect to what other reasons accounted for the Bank of Ghana's decision to actually increase the rate by 1.5%, these were the reasons that the governor assigned to them trying to manage or try to deal with the high inflation rate that the country has recorded over the months.
On the IMF program and the proposed timelines.
Well, Darrell, the governor was very optimistic that despite the fact that we have missed the March ending deadline, they have made some significant progress. Now, the governor, for instance, Darrell, stated that if they're able to get the Ministry of Finance to sign their side with respect to the zero financing and also get Parliament to also approve those 3 key revenue measures, then they have come very far in terms of meeting those preconditions that should see the IMF board approve our program. And also, they're getting the financing assurances from our creditors with respect to China and then the Paris Club. They have made some significant progress, and he believes that some of these key measures could see the board meet on Ghana's program, maybe in April ending, or them meeting all these preconditions. So all other things being equal, in April, they should have met all these key conditions for a decision to be taken by the board of the IMF with respect to approving Ghana's program, Darrell.
And there have been concerns about banking sector stability, especially with implementation of the domestic debt exchange program. What came up during their deliberations about the banking sector, and how do they hope to stabilize the situation?
Well, the governor was quite optimistic that the stability fund is there to support these commercial banks. Also, Darrell, by now, the commercial banks should have actually released their financials already. Well, there's been some grace period given to these commercial banks to try and work on their numbers. The governor has also indicated that they are open to see whether other extra measures that they can take to try and minimize these shocks of this domestic debt exchange program on the commercial bank. So in terms of taking the extra measures to try and ensure that they are not badly affected in terms of going forward and what measures that they have to take, the assurance is that they are doing, or they are prepared to take the extra measures to ensure that there is indeed stability on the banking forward. He was also quick, Darrell, to add that in terms of the numbers that they've seen, they don't see any bank getting into that red zone where it should get all of us worried. But they are doing what they have to do, Darrell, to ensure that the sector is safe and sound for all of us.
Thank you so much. Appreciate it.